opinion of why 90% of people lose money in the stock market and my understanding of that. And I wanted to start with brokers. So the common thing most people do is they'll get a large chunk of money from their retirement package, from a redundancy, from equity, from savings, go to their broker, say, go make me some money. What they don't realize is brokers get paid to get you in and out of trades. So every time they open a position, they get paid a commission. Every time they close a position, they get paid a commission. So it's in their best interest to keep opening and closing positions for you. And that's how they make their money. So if that's their objective, then they don't really care what happens to your money. They just want to be opening and closing positions all the time so they keep getting paid. So that's the number one thing. Our brokers don't really have our best interests at heart when they're investing with our money. So that's the first mistake people make. The second mistake is taking a large amount of money that they can't really afford to lose and throwing it into the market with little or no understanding of the stock market. So people just get a large sum of money, go, I want to buy some shares. They'll choose a company without doing any research or know little about it. They'll buy it and they'll just hold it, and they don't know when to get out of the trade. They're just hoping it goes up. They might want to collect some dividends along the way, but they really don't have an understanding of what they're doing. So most people get into the market, they don't know when to get in, they don't know when's a good price to buy, and they don't know when they're ever going to get out of the investment or when to sell it. So they're just letting the market take their money and do whatever it pleases with it. And as we know, the market's driven by fear and greed. So when you let those emotions play part with your money, anything can happen. So from the way I see it is, if you want to do well, then you've got to start with the amount of money you can afford to lose for a start. And the next is get an education, at least research and understand a good price to buy a stock at. You can do this by channeling. If you find a chart on a stock you want to buy, have a look at the historical prices. What's a price that it falls to pretty regularly, that it has a hard time falling below? So it might be a $40 stock. You might see that it consistently falls to $35, but doesn't tend to go below that. So the right time to buy that stock would be at $35. And you might notice that at $43, it tends to not go above $43 in price. So you know that's your sell price, $43. And if you had that basic understanding, then you know when to get in and when to get out of an investment. Most people don't know. They get in at $43 and sell at $35 when they're fearful. So you got to pretty much do the opposite of what everyone else does. The next thing that people do is they'll go and invest a large amount of money into the market without protection. And when you're uneducated and you don't know a lot about investing a huge chunk of your money without having a stop loss or a put option to protect yourself is very dangerous, because you could have all that money or a large portion of that money wiped out in a single day if the market turned, any big disaster happened worldwide. So the trick is if you're beginning and you're going to invest a large amount of money, make sure you have some form of protection, whether it is a put option or a stop loss, just in case something bad happens. Because when you're just starting out, you often don't get in at the right time and out at the right time. So it's very important to have that protection so you don't lose more than 5 or 10% of your account at any given time due to the market falling against you. Another thing people don't realize is they can actually get consistent cash flow from their shares and stock that they own. So even if your stock keeps falling in price, you get in at the wrong time at a high price, you can still make monthly income off it, which helps minimize your risk and recoup some of the losses. So if you bought a stock at $20 and each month you're able to generate $1 per share rental income, that means every single month you're reducing your risk of owning those shares by $1. So if they fell from $20 to $19 in the first month and you got paid $1, then all of a sudden you're still at break even. And if the next month you got paid another $1, they fell to $18, you're still at break even. So even though your share price keeps falling, you're still at break-even point. And then eventually when it rebounds back up to $20, you can sell them, and then all those $1 incomes you got per share over the period of time that you own the stock, that's all yours in your pocket. It's all profit. So just little strategies and basic protection, trusting brokers instead of yourself, and putting your funds at mercy of people whose interests aren't aligned with yours, are the common mistakes that people make that allows them to lose money in the stock market. 90% of people do lose money because of these reasons. And there's just some very basic, simple things that anybody can do to turn that around and become a profitable investor. And this course is designed to help give you a little bit of an edge based on my own experience. So I'll show you exactly what I do and how I know when I get in and out of my trades and how I try and minimize my risk. and then point you to professionals that will help you implement them and give you a better understanding and further education on how to do it properly. So if you can do that, you're going to have that edge that the 10% of successful traders, investors have that the others don't. So that's what it's all about, and you got to try and avoid those mistakes that everyone else makes that I just discussed in this video. Thanks for watching, and now that you know some of the mistakes and why most people don't do well in the stock market,